Morning. We ought to know.
Good
we
morning.
ought to know our counties. We ought to know our county numbers, where we come from. So, good morning from County 046. I am doing fine. It's a beautiful Monday morning. I have decided to adorn myself with this regalia. It is beautiful. And I want to tell you that as Power Monday, we are the powerhouse. We meet every single Monday, except when it's a holiday in Kenya. We meet as from 7:15 to 8:15, but we join in earlier to interact, to mingle, and to get to know each other. And who knows, you might make your million from this session. We discuss various diverse topics that are oriented for personal development, for business, and for everything. We meet virtually. However, we meet physically every quarter. And the last quarter of the year is culminated with a dinner, of which it's going to be the last Friday of this October. And I would love to meet all of us there. And my name is Lucita the Poet. And today I'm going to do a poem titled, It's About Time. It's about time. Ni wakati. It's time. It's about time we stop living in the shadows, we open our eyes, because hakuna kulala, amka na msimame. Life is a journey, sio tu tamthilia na sio drama. It's about time. It's about time we fight for the truth, not just to chase the fame like a misguided state. Kusema tu kweli ni kama dawa ya roho. Si maneno tupu na sio porojo. It's about time we choose love over hate. You see, sometimes they say, kama is so real. Please don't gamble with fate. Amani na upendo ndio njia. Ukichagua chuki, na si utabaki tu ukiwa. It's about time. It's about time we value today. You see, kesho ni siri yenye hatujui, na jana ilishapita. Na time ikigonga, don't waste the chime. Ni wakati wetu. It's about time. It's about time we break the chains from every bit of it. It's about time we gain our freedom. Tuwache tu woga, tushikilie tu ndoto zetu. Maisha ni mafupi. It's about time. It's about time we rise as one under the same sky, the same sun, the same nation, the same people. Tukiwa pamoja, hakuna kushindwa. Umoja ni nguvu. It's about time we rise. Asante.
Thank you so much, Dr. Lucita. That was an awesome poem. I am going to call upon one of us who is going to introduce the speaker of the day, and his name is Robert Manyala. He is the CEO of Research Africa Limited company. Robert Manyala.
Thank you so much. Thank you so much, ladies and gentlemen. My name is Robert Manyala from Research Limited, where we make people billionaire through software development and digital marketing. It is indeed my single honor to introduce to you guys today Mercy Thande. Ladies and gentlemen, help me introduce Mercy Thande. Mercy Thande is the founder and the manager at Smartspark Ventures Limited. Smartspark Ventures Limited is an investment company startup that began in 2022, specifically in land investment. On her background, she has been investment professional for many years with experience in insurance and unit trust, the Nairobi Securities Market, offshore investment, investment management, and banking. Her previous work experience. Mercy worked for All Mutual for many years, Britam companies for over 10 years, and several investment management and banking at Cooperative Bank and its subsidiary, Co Trust. She is experienced with NSC stockbroker, agent for Stanbic Bank. Higher education, she studied at Nairobi University, and she did arts and economic as well as mathematics. Ladies and gentlemen, please help me introduce the one and the only Mercy Thande. Thank you so much. Karibu sana Mercy Thande. We are here to listen to you. We are here to at least learn as much as possible. Thank you so much. Once more, Robert Manyala from Nairobi Securities Limited.
Thank you so much, Robert. Such an interesting introduction. I think you may have had a background in media, quite animated and quite engaging. Thank you so much. Yes, as you've heard, my name is Mercy Thande. I have worked for several years in the investment space, whether it's with unit trust investments, whether it's in the stock markets. I've done that for several years. I'm currently involved in real estate, which is what I do on a daily. Now, I was introduced here by Mr. Peter Otieno, and it's my good pleasure to have an interactive session with you so that we can all learn as much as possible how to grow wealth and how to grow investment. So I want to do a brief introduction. I know this time I've also been given was quite brief, so I want to make the most of the session here. Most of it I would want for us to be able to engage also interactively with questions and maybe comments. So I'll just do a brief introductions on the basics. Let me share my presentation here. Hope you can still see it. All right. So like I've said, my background, I work for a company called Smartspark Venture Limited, which is involved in real estate investment, but my background is still in general investment markets. So if we're looking at the basics of investing, just to begin our session at a broader overview, if we look at the basics for investing, basically we are looking at growing wealth. And for us to grow wealth, of course, we have to start by saving the money to be able to make different investment decisions and all that. So if we come to the next, if we're looking at making investments, one of the things I wanted to look at first is you're having general goals, because when you're making investments, it's not just making investments in stock market or making investments in real estate or making investments in the bond market or whichever different markets might be available. When you're looking at investments, first of all, from an individual perspective, you need to look at investments first with setting a map, a roadmap of how you're going there, a map of where you are at currently, what your age is, what your circumstances are in terms of do you have frequent income, do you have on and off income, maybe you're in business so your income comes in lump sum, maybe you're employed so your income comes in monthly. So you need to create a map first of all for yourself to be able to tell where are you, and that will inform how you invest. Whether you're looking at being more aggressive in terms of your investment, whether you're looking at being more conservative in terms of your investment, what should you measure on? Should you measure first in the more aggressive markets like stock markets, whether in Kenya or other places? Should you measure more in the more conservative investments or maybe treasury bonds? Should you get into real estate? Buy a building or buy some land or something to give you some kind of income. So all that is determined by you creating a map of how you're going about it, or your general perspective of yourself and your understanding of where you're going. So that would include also how much risk are you willing to take? Maybe depending on your age, if you're younger, you might be more interested in taking a higher risk. Depending also on your personality, you might be willing to take more risk or less risk, depending on where you're going. Then again, finally, even as you're setting out your roadmap, you need to also determine what are your goals. what are your investment goals? Are you looking to create a passive income? Are you looking to grow wealth? It may not be generating an income, but over time is growing you wealth, let's say over 10, 15 years. So what are your general objectives and how do you want to get there? So that basically would determine then how you approach all the different kinds of markets that are available, all the different investment options that may be available for you. So the first thing is to create a plan for yourself. How do you want to approach the different investment avenues that are available out there? So then, when now we get into specific concerning the stock market, you notice that the stock markets generally across the world, you have patterns in stock markets. So you'll have markets generally moving in cycles. So you'll have the bull market, the bear market. So basically, when you're talking about the bull market, is a period of time when the market, when markets are rising, when prices across different counters are going up, different shares are going up. So that will also inform the kind of returns or you experience with the market. And then we also have times of bear market when prices are basically going down. If we look at specifically the Nairobi Securities Exchange and then we compare with global markets, you notice Nairobi Securities Exchange is a bit unique if you compare to global markets. Ideally, when you're looking at stock markets, you notice that the general advice given for stock markets is that markets will go up. So you'll find over time you can grow your wealth if you just put in money in probably different counters or you put money through a fund to invest in that market, that over time the prices will go up. That's the ideal presentation. But you notice with the Nairobi securities market, there is a unique situation or circumstance we face. So over time, if you look at the performance of the Nairobi securities market, if you look at it over the last, let's even say 20 years, you notice the market has basically been moving in cycles. In fact, if you move back to about, to that 20 years, you'll notice there are counters or shares that over that period haven't really grown. Some have actually even shrunk. So the market is, or the Nairobi securities market over time does not quite perform according to how you'd expect your typical securities market. If you look at, say, the last 10 years, the Nairobi security markets has gone up more in cycles. So when you're talking about those up and down cycles, the bull cycles and the bear cycles, you notice that that is more pronounced even with the NSC. So like, I think from 2021, we had an experience of a bear market, which turned late in 2023. So from late 2023 to date, we've been in what is a bull market. And so the opportunities then mean, the way the market moves in cycles then means that depending on where you're at, you have to really keep your eyes on the market. You have to really focus on what's going on, track the news on what's going on, because if you try and keep money for a bit longer, you might find you're more or less on the same place. So for example, if you had made an investment in the NSC based on the index, if you had made an investment in the NSC in 2018, you'd actually not have made your money back by the time we're here. That's because the market from 2018 went down, then it recovered in 2021, then went back down from 2023, from 2021 to 2023, and then now we are back going up. So hopefully you would now be looking at recovering from 2018. Whereas if you had timed the market, then you'd probably have made your money if you had gotten in, let's say, in early 2019, you'd probably have made money if you then planned to get out of the market or take your profits in mid of 2021. So for the NSC, there's that cycle. There's quite a bit of cycling up and down that really influences how you can make money with the NSC. It's not the kind of market now with the way it's performed. It's not the kind of market that you can afford to leave your money and let it grow over time. Whereas if you compare, let's say, even to the US markets, for example, if you look at the same 10-year period, over the last 10 years, if you look at how much you would have grown if, let's say, you're just invested even in a fund, you're looking at consistently not having even tracked the market. You just put the market and walked away. You're looking at having made your money over that duration. If I can look at the return, let's say from 10 years ago, that being 2015, you're looking at a return that is 100% at minimal. If you were just tracking with a fund, you're looking at a return of at least 100% over that period. So the markets then, so understanding market cycles is quite important. Understanding what historically had happened in the past is really, really important, because it will guide you in terms of understanding what to expect. Of course, they say that past performance is not an indicator of future performance, but over time you see that it's important to be able to understand your markets by identifying what has happened in the past. Another thing is, of course, the economic factors will heavily influence how your market performs. I'm seeing a question already. Is it that maybe I'm not audible?
I'm raising my hand because I'm wondering whether we are still at a screen, one screen where market cycles are. So I don't know whether it's on my side. You intended to be there?
Yes. I'm still there.
Okay. Yeah, because I had to talk of graphs and we are not seeing the graphs.
Oh, yes. Okay, yes. So I was referring to a different graph that I've not shared there. Generally, just to give you the performance over the last 10 years, just roughly. Yeah, but I can share that much later. So one of the factors, of course, that we talked about, economic factors that affect the performance of the market. So we've seen, like, if we look at the causes or some of the causes of those market downturns, you notice, like, for example, the interest rates. Whether the interest rates are rising or coming down, general interest rates will heavily affect the kind of performance you get in a stock market. So you find, like, beginning of late 2023, interest rates globally have been coming down, which means then that the stock markets then have been going up. So you find globally we are experiencing a bull market where market prices have been rising. And part of the influences is, of course, interest rates dropping, and then, of course, things like inflation coming down. Kenya, of course, you find there is also some influence in terms of the political climate does influence the performance of the market. In fact, overall, over a long term, a bit of that influence has maybe weighed the NSE a little bit in terms of its performance. So some of the challenges, like I started to talk about, there are still risks and challenges as far as these markets are concerned. So like I talked about, political climate does impact the market, especially in a market. Although over time, our markets have become a bit more resilient. But given that at least 50% of the investment in the NSC is actually from foreigners, you find that there's a bit of sensitivity in terms of market performance, especially during period of high political temperatures. So when we're approaching elections and all that, you find that also affects the market. You also find that interest rates affect the market, inflation affects the market, and such things. So those are challenges still in terms of making investments in the market. You find also, at least with the NSC, there are certain counters that are heavily affected by their relationship to the government. So certain counters that have some heavy interaction with government, you find that they may be more volatile, they may be more risky over time. So that might affect how they perform with time. Moving into the process of just selecting the opportunities in the market, the NSE is slightly smaller than other markets across the globe. I think right now there are about 66 listed companies in the NSE. But if you look realistically, there are a number of them that are ones that you may not be looking to invest, or you can easily dismiss based on how they've performed in the past, market price, their movement, the price movements over time, and the actual performance of the company. So there are a number that you can easily dismiss, but there are several also that in terms of, if you look at the performance overall, over time, if you look at their sensitivity and how they move, you find that certain counters, when markets are good or when markets are going up, they are quite good places to be invested in. So one of those ones are general things like banking stocks will make quite a good return over time when markets are going up. You find certain sections like even agriculturals will also do well when markets are also going up. So you find with time, selecting certain sectors will work well for you, whereas certain sectors will tend to lag behind. So when you're making the selection in terms of the specific counters you should get involved in, you would have selecting counters such as you'd have the process of looking at the performance of individual companies. So you'd have a look at how are they doing in terms of their financial statements. You'd analyze and have a look at how are they doing, what kind of returns have they been giving over time, and whether that affects it. So you find counters like, let's say, Kenya Airways has struggled quite a bit, especially if you zoom out and look at it over long term. And part of it also has been because of its performance, over time. You find certain other ones have lagged, even though they were performing quite well before. So you have things like Safaricom, which is, I think, the largest counter on the NSC. You find maybe its performance in this period has not been as good as what it has performed in the past, and also may not have compared to, let's say, what banking stocks have done during this time of market movement. It's not quite as such. Then the other thing also is to diversify. So one of the areas to diversify is, of course, within the counters themselves, but also there's opportunity to diversify across different markets. Right now, I think with our access, with the level of access we have, we can easily, or there's easy opportunities to make investments across different markets. Like we're talking about maybe US markets, there are brokers now that are licensed by the Capital Markets Authority that allow you to gain access to foreign markets, whether directly into different counters, different shares, or directly or indirectly through funds, through either exchange traded funds. So exchange traded funds being funds like our equity funds, what we call equity funds, collective funds, where money is put together and you can make the collective investment, except now with an exchange traded fund, the prices of that fund change throughout the day. Whereas maybe with an equity fund, the prices of such a fund would change once a day, or at the end of the day, they'll announce the different prices. So there's opportunity to access different markets to be able to know how to make those different investments in those different markets. Like I said before, I would really be more interested to engage also now at this part, to just hear your questions, your comments, and engage with you further from here. Thank you so much.
Great. Antonia, are you there? You can handle this section or just go on. People can keep
Okay.
putting their questions.
Thank you. Thank you so much, Mercy. That has been an interesting presentation, and we are grateful for creating time just to come and speak to us. Question number 1 is from, I cannot see the name, it's the name of a phone. Is asking, Safaricom shares have remained low, yet we are told that they are the most successful company. What's your take on this?
I would say that when it comes to the stock market, you've seen that the performance over time, maybe there's been struggle over time in terms of performance, but there are opportunities across the different counters. So the market cycles really affect the performance of the market. That's basically what I would have said. Market cycles really affect the performance of the different counters. So you find that it's not always that the share will go up perpetually or it will keep growing. So you find that it will pull back. So you find the performance of the share might not be where it was, let's say, in 2019. But if you time the market well, so when the market is, there's too much hype in the market, that's an opportunity to sell. And then you'd have to get back into the market to buy. So that affects the general performance of the share or the counter.
Thank you. I trust that is well answered. Another question from Dr. Melvin. If demand from international buyers and individual local aggregators of NSE stocks drive prices, and given that we are in a bull market, how does this reflect the dimming of frontiers markets like ours in the eyes of international investors?
I don't know if I quite understood that question.
Maybe Dr. Melvin can unmute and explain it, because it seems a little bit complex. Dr. Melvin, kindly.
I would try to unmute him. Can't see him. Or he can raise the hand so that we give him an opportunity to unmute.
As we wait
Dr.
for him to explain, we can go to the next one. Once his hand is up. Yes, I can see him. Go ahead, Dr. Melvin.
Yeah. Unmute, please.
He
Yes,
is.
go ahead.
Right. Thank you, Mercy, for that wonderful talk. Now, maybe I'm wrong here. Is it true that international advisors are shying away from frontier markets?
If you look at the performance, I would say international investors tend to be cyclical investors or sensitive investors, if you can put it that way. And that you notice it based on how they move in and move out of the market. You don't see a more longer term take on the markets. So like I'd said, between 2018 and 2021, the market was in a downturn. So you find that in such periods, you find a lot of investors exiting from the market. Then between 2023 to now, current, market has been on the recovery path. So you find there's a lot of money coming in, and you'll be able to tell maybe from the way the exchange is performing, you'll be able to tell from a bit of activity that's going on that there's money coming in also from the foreign investors. So I would say they are quite cyclical in terms of how they invest in the market. Yeah, so that also affects the performance of the market. Yeah.
Yeah, you know where I'm going with this, Mercy?
Yes.
I'm looking at it from a macroeconomic point of view.
Yes.
If it would seem that there's a group of local investors who are driving this bull market. And perhaps it's because the government is divesting from some of these companies listed on the NSE and it's being bought. Those shares are being bought by local buyers. I'm just speculating, but anyway.
Okay, so in a summary, maybe to understand you better, what you're saying, in a summary, you're saying that as the market is going up right now, that it's actually the foreign investors that are exiting and local investors are getting into the markets.
Exactly, yeah, that's what I'm thinking.
Okay, so I think you might have a position there. When markets begin to get quite hot in terms of return on investment, you find that there's a general trend where the excitement in the market picks up. And as the excitement in the markets pick up, the people who now come in late will usually be the retail investors. So the individual investors and maybe some of those retailers or majority of those retail investors are local investors. So you'd have that transfer. So it's possible that the people that might be exiting the market are the ones that are had invested prior. So when the markets were down, the ones that are maybe the foreign investors are the ones exiting the market, and the ones getting in now are the ones that are retail investors. So what I would say is when markets get quite hot, I don't think we are fully at the heat of it, but the last 2 years, we've basically had a bull market when market is going up. So when markets get quite hot, you find that one of the risks is that you might now be caught in a situation where you enter markets with high prices. And then when the opportunities come to invest, to exit the market then goes down. So you're left with shares that you bought at high prices, but you cannot sell them off at those high prices. So higher prices now means that entering the market now is riskier than it would have been entering in late of 2023.
Okay, thank you. Thank you so much for that elaborative answer. And thank you, Dr. Mirubin, for bringing that up. The next question is, how can one invest in the US markets? Are there some agencies, that is agencies one can go to? Does your company do US markets? And I
No.
can combine that with the next one.
Okay.
Thank you for the presentation. My question is, how does one know the best mix of counters to have in your stock portfolio? You can handle this first.
Yes. So in terms of how can one invest in US markets, yes, they are licensed agencies that or licensed companies that give you access to those markets. I think there are about 3 that I would know of. I think there's one that's called HISA. There's Interactive. There's Ndovu, which is licensed as an investment advisor by the Capital Markets Authority. So there are a few of those that give you access to those markets. You can compare their different commissions, cost fees in terms of accessing those markets. But yes, they do give you access to individual shares. They give you access to funds. So yes, there are markets that there are companies that do that. I am not involved in that. I'm not involved in that from the perspective of the company, maybe just investing myself directly. The other question was, how does one know the mix of counters to have in your stocks portfolio? So that would go by sectors. I would say as far as the NSE is concerned, you'd go by sectors. You'd look at maybe what are sectors that are high growth sectors. Maybe if you're looking for growth, that is capital growth. If you're looking for dividend, you would look at the dividend yield. What are shares that give high dividend? What are ones that maybe do not give us high dividends? What has been the past performance? And yeah, what are the sectors that are leading in terms of return? So banking sectors. When we are getting into a climate where the prices are quite high, you might find insurance sectors maybe a bit riskier to get involved in because they are directly related to how the market is performing. So if the market begins to go down, then those are the first counters that in terms of prices would be badly affected. Yeah.
Thank you. Thank you so much, Mercy. And as we continue with the question and answer session, kindly, there is a lot of information about Power Monday on the chat side, about our website, about the WhatsApp group and how you can join it, and upcoming events. And also, people are sharing their contacts for networking on that side. So, if you need any information, you can ask there. And also, you can get people's contact. I can see one of us has given us their contact on the chat session. So use the chat session appropriately and you'll be able to reach out to you if we need any of your services. The next question, I trust is from the same person, Mbonje. Anauliza, what you have explained, that is talk about stocks, does it include money market funds?
Okay, so money market funds is one of the unit trust funds. So within the different collective funds, they are categorized differently according to what they've invested in. So generally you'd call them the unit trust funds. So money market fund is one kind of fund that is called a money market fund because it invests in the money market. So the money market here being treasury bills, treasury bonds, maybe treasury bills, treasury bonds. So you'd have also an income fund that would invest also in corporate bonds. Then you'd have an equity fund. So an equity fund is what then would be investing in stocks. And then you'd have maybe a balance fund that invests in a mixture of both treasury bills, treasury bonds, and also equities. Yeah, so depends on what the fund has invested in. So money market is not does not have investment in stocks.
Okay. Thank you. And also a very important information here for us to note is the fact that Power Monday is hosted and sponsored by ICT Gurus, and ICT Gurus puts your business online. It's dependable, it's affordable, and secure, providing emails and website hosting you can depend on, and building professional website ranking A in performance. You can edit your own website without keeping a developer on retainer. Yeah, that's very important information. Thank you for putting that across, and we have our contacts there. To our next question, I don't know whether I'm getting, yeah. It's also from Dr. Melvin. Bank shares are always on the rise, and yet manufacturing sector counters are performing poorly. Discuss, please. I can combine that with another one from him, question number 2. Between companies like Ndovu and the older stockbrokers, which are better placed for new entrants, investors in the NSC? Yeah,
All
you can
right.
answer those ones first.
All right. So I think when it comes to the issue about banking shares are on the rise and manufacturing sectors are performing poorly, I think the underlying thing is about the performance of the sectors. So you find if you look at the financial results that have been announced, you find banks are tending to be more resilient in terms of performance, whereas manufacturing sectors or certain sectors are affected by a lot by the economic performance. So even when the economy is not doing too well, you still find that banks are still able to report profit, and good profit. Whereas you find that's the time when you notice maybe decline in profit in manufacturing sector and all that. So that might also be a reflection. So even when somebody is selecting sectors, I think it's good to look for sectors that are also a bit resilient in the market. But generally, when the market is going up, then almost everything tends to go up. The issue then might be in terms of relative return for each sector. Between companies like Ndovu and older stockbrokers, which are better placed for new entrants in the NSC, I think that would then be to do with fees. You'd have to look at the aspect of fees and even what you're looking for. So if you're looking at Ndovu, there's the issue of giving you access to international markets, so that might appeal to people who might want not just to be limited to the NSC. So that might affect. For those ones that are looking specifically to get into the NSC, then other brokers might, the older stock brokers might also be relevant. The other thing is the experience of accessing your ability to get in and out of the market. So accessing their trading portals to be able to get in and out of the markets. You might be able to consider that when you're trying to get into the different, when you're trying to choose the stockbroker.
Okay, we can take the next two questions and maybe we have a pause at that point because I can see our time is far much spent. And this one is from Mr. Odhiambo Olale. What percentage of Kenyans invest in stock market versus in saving account? And question number 2, why are Kenyans low on investing in capital markets? And question number 3, is that because of poor financial literacy or trust issues? Those are 3 in 1 from Mr. Olale.
Okay, I may not have the exact data in terms of percentage of Kenyans investing in stock market versus saving account, but even without that data in my hands, I think I can say clearly there are more Kenyans investing in or putting money in the saving account. Putting money in the saving account does not mean that they are actually investing, but I would bet money that there are obviously more Kenyans putting money in the savings account versus investing in the stock market. I think where Kenyans slow in investing in capital markets, I think that's a bit of what you've said here. A bit of it is actually trust issues, not just financial literacy. There's probably poor financial literacy, but there's actually also trust issues. When I used to get involved in stockbroking, and even now, you find that a number of people, people who had invested in markets before, the stock market before, especially the Kenyan stock market before, there's a bit of reluctance to get back into it. And part of it has been, of course, past performance. If you look at long-term investment, what we used to call the blue chip counters, the Nation Media, the Kenya Airways, Uchumi at a certain point, if you look at their present state right now, they are in a bad state. So a number of people got banned over time, given the performance of the market. Like I said, if you look at just the 10-year performance of the NSC, if you had put money at the peak of 2018, you would not have recovered your money. But now if you look at so you'd not really have recovered your money. But if you look at other markets, a 10-year period, you should have grown your money, not just recovered your initial investment. You should have grown your money over time. So I think that really does affect a bit of confidence in terms of investing in capital markets. But there's probably also a little bit about financial literacy there that maybe someone can talk about. But over time, I think the performance of the market also affects. If you look at maybe, I had the privilege of having been in the market maybe 15 years ago. I haven't been as active in the stock markets in the last 5 years, but I had the privilege of being active in it over 15 years ago. And if you look at the general excitement that was in markets then, let's say when Safaricom was listing, if you look at the kind of excitement that was happening around IPOs then, and the kind of interest you have in markets now, it's not the same. It's not the same. And a bit of that has to do with overall performance of market over time. Yeah.
Okay, our time for question and answer, I trust it's up. And I would like to take the meeting back to the moderator.
We could handle a bit more because we can close it in 4 minutes, that question and answer. But I think it's also important to comment that, like Mercy is saying, one is confidence, and then there is something that Dr. Melvin was alluding to, which is very important. There are people who are actual movers. They can choose to buy stock, buy stock, buy stock, so that people see that the people have the impression that it's growing. Yeah, they are big names and they have the capacity to buy. And then people come in in draw. People come in large numbers that this one is performing very well, and then they move out. And I learned that if you learn about a stock performing well in the newspaper, you are late. Yes. So there is a lot that you need, a lot of homework that somebody needs to do, including largely people just look at the stock market, the news, instead of even digging deeper into the management, what really is driving this particular factor. And I think over time, my own observation has been that the financial sector has been fairly stable. The manufacturing, I think every other year there is always a hit with respect to taxes, imports, and whatever, all sorts of things. So there is always a lot of dynamics that play there. Maybe Mercy, you can talk about that more. So these big movers, maybe
Yes.
use Chris Kirubi because he's no longer there. Chris Kirubi buys one, and everyone feels like Chris Kirubi bought this. Now this one must be performing well, and everyone runs in, and then he sells everything.
I think it has to do with strategy and how you approach the general investments, not just in terms of the NSC, but the general investment markets. So, for example, it's important to know where we are in terms of cycles, the market cycles. It's really important to know where we are. Are we in a bear market? And are we in a bull market? So the general advice is when others are selling or when markets are going down, it is a good time to start investigating about getting in, right? It's a good time to start checking, should I be getting in at that time? And then when markets are really going up, and especially when markets become very heated and there's a lot of hype, and maybe this has done 10%, 20%, 60%, I think the NSE did, was it 60, over 60% plus return in the last, year, 2 years? When markets are, there's a bit of excitement in markets in terms of return, it's a time to be very careful. It's a time to be very, very careful in terms of making your investments. So that's good advice, because the more so-called sophisticated investors, that's what they look at. So, and the more, like, if you're not too knowledgeable about the market, you might make the decision based on the general excitement in the market. So if you read the newspaper and they say whatever share did 20% or 30%, then you're looking to get invested. By that time, the somebody who had thought it through a bit more is when they are exiting. So they are selling you, they are making their profit when you're getting in. So when you get in, then you then take the loss when that share does not perform. Yeah.
And then there is also the idea of IPO, which many people think it's a good time. But I think many investors realize that IPO may not be the best time to buy stocks. What is your thought?
I don't know. When was the last IPO?
Was it Safaricom or something? I don't remember. But people buy at IPO, then it somewhat gets or has the impression of it's going up, and then it goes down, something like that. And I think I later read that IPO is not it's not the best time. You need to keep yourself out until it's stable. What is your thought?
We haven't had many IPOs coming into the market. I think in the last 10 years, I don't know if I've heard of any that's been coming into the market.
Yeah.
We've not really had that, but based on the prior performance, let's even say of the Safaricom, I think it depends really on the counter that's getting in the market. It really does. There are certain shares that when they are listing, there's so much excitement, and valid, because there's something to be excited about the performance of that. But okay, let me not go that direction. There's certain, so there's certain ones that have a valid reason to be excited. So if you looked at what the Safaricom shares did, I think they listed, was it at 5 bob? Within about 2, 3, 4 days, I think they had gone to, was it 10 bob? So they had doubled your money within a short period of time. There was a lot of hype when Safaricom listed. But in terms of holding it over time, I think within, is it 3-4 years, the share that had listed at 5 shillings came down to a low of 2 shillings and 80. So that hype, of course, died down, and another opportunity was found for making the investment. So I think sometimes when there's a lot of hype, you might, if you got in, it might be wise to get out also very quickly when there's a lot of hype. Sometimes when there's no hype, when there's a lot of fear, like they say, when people are fearful is when you should be buying in, and when there's so much greed and excitement is when you should be getting out.
Thank you very much. Yes, Antonia, we can move on. I don't know who is giving vote of thanks. In the meantime, for people who are here, just know that we have a Power Monday dinner coming up next month on Friday, the 31st, at Nairobi Club, and you are all invited. And we will close either when the room is full or the time is up. Whichever comes early. It's only 3,500 per person. I'd put a pay bill there, or if you pay later than 10th of October, it will be 4,000 because of logistical reasons. Otherwise, as it's been mentioned, this program is always hosted by Live Your Dream, but sponsored by ICT Gurus. So, Antonia, Noel, who is...
Thank you so much. I have a guest here. So Odhiambo Olale, kindly give the vote of thanks.
Good morning. How are you? Thank you very much, Marcy, for such a candid and very, very thought-provoking session. We have learned so much. For me, my two keywords are resilience and also that the markets can be hot. I thought that when we were young teenagers, we used to think that somebody's hot, a lady is hot, or a guy is hot. But you've taught us that even the markets can be hot. And that means we need to be very, we must also be very clear, discerning, so that we understand the markets, so we know when to move in, when to pull out, and such like issues. Something else that I think also came to my mind as I was, as you're doing your presentation was that I was at a certain session over the weekend, and somebody reminded us that about a quote by Professor Ngari Madai saying that the best time to plant a tree is not tomorrow and not even today. It should have been 10 years ago. So even for us, if we want to invest, we should think of investing, not just think of investing, we should be investing now for the future. And the stock market is an area that there's some good money, but we also have to be very careful how and where we do it. And thanks so much for your financial literacy session that has helped us learn a lot. But I'm sure if we gave you more time, you'd have even gone deeper into the issues. But for now, my grandma used to tell us in Luo language, "Muonyolao." Muonyolao means we need to digest. You've given us almost an hour of very, very heavy stuff to consider. So it's time for us to digest. And then I'm sure we have your contacts. We'll be looking for you for some follow-ups. Thank you very much once again, Marcy. And we look forward to another session with you. Thank you.
Mercy, you can put your contact in the chat also. I think you hadn't put. For people who want, there are other people with questions, including what services does Smartspark offer, and whether they got answers for their questions, so they can reach out to you.
Thank you. Yes, I will do that.
Sorry, you can go ahead.
No, I was just saying thank you so much, and I'll also do that. Thank you so much for giving me the opportunity. I appreciate.
You are welcome. Thank you so much. Back to Antonia for admin, and then she'll close for us with a word of prayer. And I even think most